The Australian share market capped off a strong week with its fourth daily rise. Bank shares climbed to a 16-month high amid signs of a slowdown in home lending. Here's Philip Lasker.
Once upon a time, a strange group roamed the streets. They were called first home buyers. This species is close to extinction as its habitat, affordable housing, is overrun by other domestic and introduced species called investors. There's only one line rising strongly here: investor loans, even though the number of home loan approvals fell in October. The clampdown on bank lending ordered by the regulator is having an impact, but not necessarily where it's needed. So investors are convenient targets for the banks. ANZ joined its competitors in lifting rates on investor home loans in response to higher funding costs. The tax office got some bank profits back though. Here are the top 10 taxpayers in the ATO's latest corporate tax transparency report. It includes nearly 2,000 public and private Australian and foreign-owned companies. 36% of them paid no tax, like Qantas, because it made a loss that year. And we know the tax man is chasing BHP Billiton and Chevron for more money. Most of those big taxpayers did well on the market as it recorded its fourth straight rise. A decline in consumer stocks was offset by a rise in financials and miners. Banks continued to do well despite the slowing economy. PE ratios for the big four banks are the highest in a year. Put it down to dividends and a massive exposure to hot property, which could come back to bite them. Share investors are also encouraged by the prospect of even lower interest rates following this week's horrible GDP number. The Australian dollar is firmer across the board. It's over 74.5 US cents, and that's finance.